Welcome to Trading Lounge and the European indices for Friday, October 8, and starting with the FTSE, then we'll look at the DAX and then the STOXX 50, and we're looking at wave 3 here, we're looking at wave 4 over here, we're looking at this correction as a double zigzag, which will be 3 waves for the W, 3 waves for the X, and 3 waves for the Y. Now, I understand that it looks bullish and it's got nice support on the closest largest number and so on, but I don't count an impulse wave to the upside here. I do here in terms of 1 and 2 here, and 3 and 4 and 5 for the A wave. That's very clear, but it doesn't give me 5 waves to this top here. It just gives me an A wave in 5 here. So even if I looked at this as wave 1, then it's hard to look at this as the A wave, the B wave, and the C wave for wave 2. It just doesn't add up. So it's a little bit complex, and we're looking at the same thing for the US markets as well. So at what point would I be wrong, and at what point that we need to be bullish? Well, that to me would be at 7,100, because the move up through here would be in 5 waves here. So let's just go to the hourly chart and draw that out a little bit. So just getting back into perspective. So from the W here, you can see we've got 1 and 2 and 3 and 4 and 5 here. So that makes a nice impulse wave here. Then we've got an ABC here. So and then we've got another 5 waves up here. So I can't call that wave 3 and that wave 4 there. That doesn't sort of work either. So I'm kind of left still, you know, the same thing's happening with the US markets in that we're working with lots of 3s. There's in most of the markets around the world, really. So in the indices anyway, for this correction, they're working in lots of 3s. So yeah, I would imagine that we've got the A wave here, and then an A and a B and a C wave here for this. You could probably put the A wave here, could you? An A and a B and C maybe. Not that it matters, still leave wave B here. So we're really looking for 5 waves here. And here you can see we've got 1 and 2 here already. So we'd have to look at that as 3 and 4 in here. So we could either have a top in play now, or we've got one more little push higher to go. So if we've got one more little push to go higher here, then we'll have the first high above the level. So if we're going to go long, we need to get that first high above the level here, in this, just say this case, or even this is probably a bit more in tune with us. So we would just put a line across the top there, and that would be ready to go long there. We may get a second high here, and then you can drop down to that, down into that high. That's really what that means. That's at the point that we would be going long at. So we don't, I mean, basically not going long at, but turning bullish at, you know, calling the low in at this point for all the European indices. But yeah, can't go there just yet. So even if we don't have, this is 1 and 2, we'll have a look at the STOXX 50 for all of this, but yeah, let's just wait for this setup here. That's really all I can say on the long side anyway, you know. Let's have a look at the DAX. So this is the DAX on the daily charts, the same thing as well. So it's a bit complicated because like I say, it works in lots of 3s. So the W's got 3 waves in it, the X has got 3 waves in it, and we're looking for this as well. Now that may need to be put over there, but let's just go to the 4-hour chart on this and check where we were before. So yeah, from wave 3 here, we've got the A, B, C for the W, and then the X, and then we're just trying to work out the Y here. Now this Y here could also go into this space here on this low here for wave 4, okay? But once again, I would need to see support on top of that 50-60% retracement level, and that brings us into group 1. So that's fantastic because we've got that price point to work with. So the 15,300 there is the top of group 1. So that's what we would need to have support on. So we would look for a little classic trading levels pattern sitting on that high. So if that's 15,300 here, we'll need to see the arrival, the reaction, the first high above the level, and that's where you can go long from above that high there. Don't chase that up there because you'll get trapped. And then we're looking for an ABC, so you may get that entry point, or you could even refine it over here further for that entry point. But this is where you've got to be careful. Make sure that you're buying one of these new highs, because you could get trapped and this could just retest here and drop at that point. That's the point of all of that. We can take a closer look at that here. And this could be counted differently, I understand, but we're looking for the same thing in all markets here. So here we've got 1, 2, 3, 4, 5 for the A wave, an A and a B and a C for the B wave, and then the C wave can come back up to the A wave here a little tad higher and then drop down from that point. So let's just look at the hourly chart here for this. So 1, 2, 3, 4, 5 for the A wave, then an A and a B and a C for the B wave, and then looking for 5 waves up for the C wave there. So probably another move to go. And this gives us a little bit more clarity on that number of 15,300. So we would need to see on the long side, just to say, because we need to know at what point we're going to be wrong, and we can use this here. So all we need to do is get that top in here, and we could use the second one. And this is where you got to be careful, because the market can come up to here and then drop from that point. So going in before that could get you trapped. Otherwise the market's got to prove to you that it's strong. So taking out that high and that high would do that. And at the same time, what it's doing is it's giving you support on top of 300, and that probably doesn't seem much to you, but I know that what it will do is it will take away the market being pulled by this number. And it's tested support on that number that changes the direction. So that number is critically important, that level, and the trade setup on that point. Don't try to jump the gun. Just allow it to come to you. Allow the market to prove to you that it's strong enough to take out those highs, and then you'll be on the thing. Because also too, you just got to kind of understand that the move up here, if it's an impulse wave, right, then it's going to need to have a 3-wave correction of a reasonable size before going up again. So it's taking out that high and that high. So after 5 waves, you get a correction in Elliott. So that's where we're looking at that. So that's the point that we would be wrong. So like I just mentioned, there could be a top in play here already. Let me just go to the tick chart. I haven't seen that for a while. I probably haven't updated it either. Not really. Still at an old. So we've got a clear 1, 2, 3, 4, 5 for 1 and 2 there. So this will be 1 and 2 and 3 and 4. Okay, so there's probably still another one to go on top of that. So let me just peg this out a bit, and we'll just compare this to 1 and 2 and 3. So we've got 2, 3, 4 and 5. So that's where that's looking, I think. Yeah, I have to go with that, I think. I'll have to double check that though, and that's all 1, 2, 3, 4, 5 into that space there. So that's what we're looking at. We're looking for 2 more little highs, all said and done. So we're looking for a move up to here, to the 15.3. We're looking for a reaction from the 15.3, and then we're looking for the first high above the level. So that's where it all comes in. So if you're going to go long, you still need that. It'll be something like that. If Friday closes strong, then Monday's going to follow through. So you'd want to leave the money in the markets at that point if you're, or part of it if you're a trend trader or whatever. Yeah, the other thing is that if this is the top here, then it'll just, it'll retest here somewhere and it will drop down. The other thing about shorting this too is that if you can get the top there, the first move down was likely to be in 5 waves, so you're going to get a correction in another 5. So it's really after 3 waves down that you want to start looking at going short, because anything below that 3-wave move, and this leg here needs to be roughly the same size as this one. This one will be sharper and this one will be on more of an angle, and yeah, that's what you're sort of looking for in a way. So a bit like this here, so it's an A wave, a B wave and a C wave here, then you can go short under that because you've got 3 waves there, that sort of thing. Let's just move along and have a look at the STOXX 50. So yeah, it's the same thing here as the DAX. So I'm calling this 1, 2, 3, 4 and 5. It makes sense. There's 1, 2, 3, 4, 5 there for the nice third wave. 1 and 2 is good, 3 is good, 4 is a little bit high, but it's okay, and then down for 5 here. So then we've got all of this dance here that, you know, we need to make heads or tails of. I suppose, you know, we could have a low in, and I could simply copy that and put that wave B right here, and then copy the wave C over here and put that there, and we've got the low in play there. I mean, that's possible, but as I mentioned, a lot of the markets haven't pulled back to where we wanted them to pull back to. And, you know, sometimes they don't pull all the way back as well. But that's the only way I could finish that off and call that done and dusted at that point. But as I said, we still need to get this move up here, right? And then to go long, you would just need some sort of ABC pattern here before going long again. And that would be the right thing to do. We've got that 5 waves, so we've got the wind behind our back, taking out that top. The second high, but this is where you got to be careful, because if I'm right with my count here, then we'll just be coming down at that point. So it's kind of like a, you know, it's a do or die line in the sand type of thing here. Let's just check on this too. So 1, 2, 3, 4, 5. Yeah, these are going to go up higher, which is kind of good because I like it being a bit higher, because it gives us a chance to work with these levels properly, you know. I'll have a close look at that in a moment. So it's possible to have these guys in here, but that will get resolved up here, I imagine. Bring that across. This might take a bit long, sorry about that. That's 1 and 2 and 3 and 4 and 5, so that's there. That doesn't really give me a 5 wave there. It's more like an A and a B and a C wave there, but that's in 3 as well, so there's a problem there. But I'm just going to be conservative and put that there. How does that look? I mean, I like the third wave, so I have to kind of go with, oh yeah, there's the, oh no, 1, 2, 3, 4, 5. 1 and 2, no. Well, that's the difference there, then. That could make that. I need to double check that on the tick chart. Let me just have a look at this then. That's 1, probably 1 to there. 1, 2, 3, 4, 5. The third wave, some 4 to 5th and 5th. So that's okay at that point. But that's taken from that point, so that needs to disappear at that point. So I think I'll have to go with that. And if that's some sort of A, B, C, D and E wave here, I don't think so. And that's definitely pull back there. It's like 1 and 2 and 1 and 2. I'm a bit unsure about that bit there, but still, why is that? Oh, well, that could go there then. Doesn't seem quite right. I'm just thinking of this as 1 and 2 in here, and 3 and 4 and 5, but it just looks like a third wave in here. And I probably need to take that top. Yeah, anyway, a little bit sort of iffy. But what I can say is that the good news is that whichever way I look at it, there should still be one more. I'm not sure what's going to occur here, but we want that high. Okay, I'll just leave it at that. So at 4,100, we're still looking for one high up here, and that will give us our reference point, okay, to go long on. And the market should drop back after that, but it'll give you those 2 points after that, you know. That's the important bit. So just be patient, because at this level, it's going to take unless something happens in the off hours, then this is going to spend a bit of time up here. It's not good. It's kind of reached its target, psychological target, so it's not going to race off like this, you know what I mean? There's a beginning and a middle and an end, and this is the beginning, this is the middle, and now we're in the ending process here. So you need it to end, and you need it to roll over, and then you need to wait to pick it up on the long side or the short side. And you can use group 2 as well, so group 1 and group 2. So if we're looking at group 1, so the top of, if something goes drastically wrong and the market is really powerful, getting support on 4130, the top of subgroup 1, is really critical to go long on if you get a tested support on that with the classic trading levels pattern. And on the downside, we got group 2, and the lower level on group 2 is 65. So as 65 becomes the retested resistance, then you can be on the short side at that point. So that will come down here, bounce off that, come through it, the routine. You could edge in a little bit early if you wanted to, because we've got the 80 there. Not that would use that, but would use the 72. So you can use the 72 to go short on as well as a retested resistance at that point. Just tune that in there. That looks a bit weird, doesn't it? What have I done wrong there? Put the wrong number in. There we go. So you could use the 2 there as well, and I'll just finish putting in group 1. So 20 and 10 there, they will act as resistance as the market goes up, and you'll see that. So yeah, for whatever reasons, later on here, if you get some little fluff in here, and then over here you see that we're getting the top of group 1 here with the classic trading levels pattern as support, then that's where you definitely have to go long from at that point. Alrighty, I'll leave it all at that. Thanks for tuning in. Cheers.